The Bitcoin halving is almost here, and you might ask yourself, now that we are so close, what is going to happen with Bitcoin and what about the price? But also, won't miners become unprofitable after losing 50% of their revenue, and will they then just stop operating? Wouldn't that be disastrous for the network security? If you're curious to find it all out, sit back, relax, and keep on watching. Hello, I'm Adriaan for Bitcoin for Beginners. Before we start, please pause the video here first to read our full disclaimer. This video is not investment advice and only contains personal opinions. In this series, What's Up Bitcoin, we will explore major events and developments that impact Bitcoin. This episode is all about the long-anticipated third Bitcoin halving, and we will give you a final update before it actually happens in about a week's time. Let's get into it. First, as a quick reminder about what the Bitcoin halving is about. As you should know by now, every more or less 10 minutes one block with transactions is added to the Bitcoin blockchain. And each block pays a mining reward to the miner who has mined that particular block. The mining reward contains all the transaction fees plus the block reward of freshly minted Bitcoin. In 2009, the block reward was 50 Bitcoin every 10 minutes. But every 210,000 blocks, the Bitcoin protocol applies a halving of the block reward. 210,000 blocks is the equivalent of approximately 4 years. Because each block isn't exactly 10 minutes, the precise date of the end of 4 years might differ slightly during those 4 years. The first halving in 2012, the block reward went from 50 to 25 Bitcoin per block. The second halving in 2016 to 12.5 Bitcoin per block. And the third halving is the upcoming 2020 halving at block 630,000, and that will be 6.25 Bitcoin per block. Eventually, around 2140, the block reward will near zero and 21 million Bitcoin will be mined in total, and we will have reached the max supply. As you can see in the famous Bitcoin halving countdown timer, we are less than a week away from this highly anticipated event that the Bitcoin community is talking about for years already. Many expecting that the halving is going to spark the new bull market. At this moment, it looks like the halving is going to transpire somewhere early on the 12th of May UTC time. Because the halving depends on the 630,000 block count and the average time of mining each block until then, the halving may even end up happening on the 11th of May. So where are these bull market expectations based on, and are these expectations reasonable? The first chart shows the different phases that Bitcoin goes through each halving cycle, with a raging bull market as the first phase after each halving. The second chart is from the stock-to-flow model, which shows the elastic relationship between the model trajectory and Bitcoin price action, largely impacted by the halving effect. After the halving this month, Bitcoin's inflation rate drops to 1.8%, for the first time lower than the inflation rate of fiat currency, which is a historical milestone for Bitcoin. Next halving, the Bitcoin inflation will even be lower than gold. To get an idea of what might happen this halving, let's zoom in on the last halving in 2016. History might not repeat, but it often rhymes. First, there was a small pre-halving rally, followed by a correction during which the halving transpired. After which the price dropped 30% more. Then a 2-month consolidation. Then finally 3 months after the halving, a breakout leading to the previous all-time high level, 6 months post-halving, followed by a 35% correction, and then the 2017 bull market took off, reaching its peak 1.5 years after the last halving. The other question we had was, won't miners leave the network after their rewards are cut in half and they become unprofitable? Let's zoom in again on the previous halving event to find clues. The hash rate symbolizes the amount of computer power the miners commit to the network to mine blocks, and by doing that, securing the network. After the 2016 halving, the hash rate was indeed dropping. As we just saw, the Bitcoin price was also dropping that same period, which probably aggravated the situation for miners to drop off. However, by early August, the hash rate started increasing again, soon to be followed by the price. Within a month after the halving, mining power was increasing already. If we zoom out to the bigger picture, we see that the hash rate drop after the 2016 halving seems microscopic in perspective. Even during the bear market after 2017, hash rate kept on growing exponentially. My expectation therefore is that we will see inefficient miners drop out soon after the halving. Efficient miners will continue, but hash rate will drop temporarily. This would lead to longer than 10-minute block times during that period. But every 2 weeks the mining difficulty will decrease, making it easier and cheaper to mine, so the block time will return to normalcy, but also more attractive and profitable for miners again. And eventually, hash rate should resume to increase. For perspective, even if hash rate drops 50%, it will still be higher than all of 2018, while the Bitcoin price has been under 10,000 most of that year. What is the price doing now that we are less than a week before the halving? We at least already have had a short-term rally. However, this was after the major capitulation caused by the recent global crash in financial markets as a result of the economic lockdowns. Hard to tell whether this last rally was just a rebound from that capitulation or indeed fueled by pre-halving fear of missing out FOMO buying. Bitcoin has however been in a similar trend as the US stock market, although Bitcoin's recovery started slightly sooner. On the other hand, Bitcoin is now already in profit since the beginning of the year despite the market crash, while US stocks are still at a loss this year. Bitcoin's recovery has therefore been stronger so far, so maybe pre-halving FOMO did contribute. Recent hash rate is still in an uptrend. Despite the huge drop during the crash in Bitcoin's price, hash rate since a few days reached new all-time highs again. Looks like miners are trying to get as much Bitcoin as possible before the halving. What do I believe is likely to happen after the halving next week? I don't expect the halving itself to be particularly eventful, and more likely than not that afterwards we are at least going to see a dip in price action and a drop in hash rate, before both making larger moves to the upside. But a real bull market kick-off perhaps not sooner than 3 to 6 months, and worst case probably not later than 12 months after. With a continuation of the patterns from the previous halving cycles in mind, my personal guesstimate would be a price peak between 80 to 150,000, 1.5 to 3 years from now. No idea if that will happen, just an assumption of where that trend would lead if it holds without interruption. Stock to flow model then forecasts that Bitcoin should pass 100,000 somewhere in 2021. It will be very interesting to find out if the model proves to be true. By the way, let me hear in the comments where you think Bitcoin will peak in the next bull market. The other side of the coin is that all the models, patterns, forecasts and predictions have been made in a pre-pandemic lockdown economy. But after the economic lockdowns, we have entered uncharted territory and unprecedented times that could have unknown and unpredictable fallouts that might manifest even months later. If a massive economic collapse happens, people might not have enough buying power to invest in Bitcoin or even have to sell Bitcoin to buy food. This could dramatically disrupt and nullify the halving effects, at worst cancelling the anticipated Bitcoin bull market. Alternatively, it could just as well happen that a collapse of the financial system or hyperinflation cause more awareness for Bitcoin's properties or even a capital flight into Bitcoin. Hopefully the Bitcoin infrastructure by then will be robust enough either way. Because of the global uncertainty and unprecedented times, I think it is wise to assume that all bets are off in terms of halving predictions and models that have been made under the assumption of the world before the global economy was shut down. However, personally I am still confident that at some point after the halving, it is more likely than not that we will see a raging bull market, either despite or because of the global crisis. It still looks like this year will be a great year to continue dollar cost averaging before Bitcoin's real moon mission. So that's about all. Don't forget to give this video a like, it helps us a lot. Also follow our channel by subscribing for more of our episodes. If you have done that already, watch one of our other videos that are featured here. See you all next time.